Hey everyone, I hope you guys are doing well. Today we're looking into Micron Technologies. This is a company that operates in the semiconductor industry, and in my opinion there's a lot of investors that have been overlooking this stock for a while now, and there's a lot of value to be found only if you just dig just a bit more, and we're going to see about that right now. Alright, so as you guys know, book value is the total assets minus the total liabilities, and it gives us an idea about what is the value of the assets that the company currently holds. Whereas when we talk about market cap, it's more about the potential growth that the company can see in the future. So here we have a market cap of about $76 billion, where the book value is at $48 billion. So this gives us a pretty good price to book ratio of only 1.6. So in other words, if you were to buy the whole company right now, most of the price you would pay for it would bring you actual assets and not only the prediction of future potential growth, which is a very good thing to see. Alright, so the reason why I started by talking to you about the book value is because here in this graph you can see that for the past 5 years, the compounded annual growth rate of the book value has been increasing of about 30% each year, which means that every year the book value of Micron has been increasing of 30% for the past 5 years. That's really rapid growth. Now the reason why the book value of the company is growing so fast is because the company is using a lot of its free cash flows every year into the capex expenditures. You can see here in the graph that for the past 10 years, recently it's been starting to really invest heavily in the capex. And what this does, it's bringing the total assets up. And if you look at the formula, this is the reason why the book value is increasing so fast in the recent years. And why is this important is because already the book value is close to the market cap. So all these expenditures are just going to bring the book value closer to the market cap, and these expenses are potentially going to bring a lot of return for the future. Alright, if you now look at the growth of the company, we can see that the revenue has been increasing year over year of about 32%, and the net income also increased of about 182%. One thing to keep in mind is that here you can see that the revenue for the past 10 years hasn't been the most consistent, okay, we gotta admit. This being said, it does look like the company is turning it around. Now, one of the reasons why Micron is growing again is simply because the semiconductor market is expanding. I mean, here, look, you can see that the semiconductors are touching a lot of applications: smartphones, personal computing, automotive, industrial electronics, server, data centers, and storage. There's a lot of applications for it, and you can see that for literally all the applications for the semiconductors, they're all expected to increase for the next 5 to 10 years. So obviously this is going to have an impact on the growth of Micron, and we're already seeing it. Alright, so if you're an investor or someone who's looking to learn about investments, this is the kind of analysis that we do in this channel. We look at companies focusing on their fundamentals, and we try to find value at the current prices in the current market. So if this is something that interests you, please subscribe and join the community. It would really mean a lot. Alright, so before we start comparing Micron and its competitors, let's just first look at the profitability. We can already see that the gross margin is at almost 46%, which is average. The operating margin at 33%. Net margin at 29%, which is pretty good. Free cash flow margin is at 15.5%, and free cash flow as a percentage of earning is only at 53%. Now, these two last ones, the reason why they're so low compared to the net margin is because, again, the company is using a lot of its free cash flows and investing it in the capex. This is why there's such a big difference between the net margin and the free cash flow margin. Alright, looking at the financial health of Micron, we can see that the current ratio is around 3, so there is no short-term financial distress at all for this company. The intangibles as a percentage of total assets is only about 2%, so most of the assets Micron possess are tangible, physical, so which is good. The shares aren't really increasing, there's almost no dilution, and there's about 146% more cash than current liabilities, so again, no financial distress in short term. Now we're going to compare Micron and its main competitors. We have AMD, NVIDIA, and Intel. We can already see that Micron has the smallest market cap with only $77 billion. Now if you look at the revenue growth, the compounded annual growth rate of the past 5 years, we can see that both NVIDIA and AMD are the fastest growing company in this industry. Now if you look at Intel, we can see that it's lagging behind, losing some market share and slowing in terms of growth. And you have Micron, which is a bit in the between, in the middle. If we now look at the net profit margin, we can see that NVIDIA is clearly leading here with 36.2%. This being said, Micron is standing in the average with a good 29% net profit margin, which is pretty good. Now for the current ratio, we can see that on average it's around 2 and 3. Yes, NVIDIA is at 6.7, but this is not necessarily a good thing, because it can also say that NVIDIA is not using its short-term assets as efficiently as it could. Nevertheless, I don't see any problems in neither of these competitors, and Micron is standing at 3.1, which is really good relatively to the others in terms of financial stability. Now, in terms of valuation, we can see that AMD and NVIDIA have both the highest PE, which is normal, it's reflecting the fact that they're also the fastest growing companies. Now, if we look at Intel and Micron, we can see that Micron is growing about 3 times faster than Intel, and its PE is relatively close to Intel. So already there we can see that Micron does look attractive in that sense. Now, if we look at the price to free cash flow, we can see that again, AMD and Nvidia have the highest one, which is reflected by their growth. But if we look at Intel and Micron, we can see that Intel has a higher price to free cash flow than Micron at 18.2 and Micron at 15.8. So in terms of price to free cash flow, Micron does look really attractive if we take into account the potential growth that it has, which is already higher than Intel and selling for a best price to free cash flow than Intel. Now remember guys, this price to free cash flow ratio for Micron could be smaller, so cheaper, if only Micron wasn't using about 50% of its free cash flow into CapEx expenditures. But again, even taking that into account, Micron does look really attractive. So for the Analyst Insight, we can see that their 1-year price target is around on average of $114, which is about a 58% upside. But the part that I want to focus on the most about Analyst Insight are the revenue estimates and the earnings per share estimates. So on average, for the 5-year compound annual growth rate of the revenue, we're looking at 12.3%, and for the earnings per share, it's about almost 20%. So we're talking about double-digit growth for both revenue and earnings per share. So looking at these double-digit growth, if we look at the PE ratio that we saw earlier and the price to free cash flow, even compared to the competitors, I mean, Micron just looks undervalued right now. Alright guys, so that's it for Micron. As always, if you enjoyed, please like and subscribe, and let me know in the comments which other companies you want me to analyze next, and I'll see you on the next one.